deception, betrayal, collusion. What did Janet Yellen say? She says, who's going to decide who lives or dies?
It will be her, the overwhelming majority of the FDIC board, and members of the Federal Reserve. So they're going to decide which banks are worth saving and which banks aren't. And we all know which banks they're talking about. These are the commercial banks. These are the banks that we are seeing billions of dollars flow into now over the last several days. People are yanking their deposits out of these smaller banks because they're terrified for exactly this. And when she said this, she admitted the fact that they are going to pick and choose as to which ones they believe are too important to fail and which ones aren't. This is going to herd everyone into these banks. Every one of the people who have large accounts at these regional banks are going to pull their money out and they're going to send it over to JP Morgan, to Morgan Stanley, to Citibank, to Goldman Sachs, because they know that those banks will not be allowed to fail.
Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVB just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is your plan?
Made that determination.
Right. So what is your plan to keep large depositors from moving their funds out of community banks into the big banks? We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No, it's happening
and
because you're fully insured no matter what the amount is. If you're in a big bank, you're not fully insured if you're in a community bank.
Well, you're not fully insured.
Well, basically what she said was that the only banks that will be bailed out will be those banks that have the approval of the majority of the FDIC board, the majority of the Federal Reserve Board, and Janet Yellen herself. Those are the only ones that will be bailed out. In other words, those banks, she said, that in our minds are too big to fail, the systemically too big to fail banks. In essence, what she was saying was that all of those smaller banks are dead on arrival. They won't be bailed out. And if they're not deemed to be systemically important, then they will have no backstopping. And what that is basically doing is herding everyone into a pen of the 4, 5, 6 biggest commercial banks in the world, or in the United States, the Wells Fargos, the Bank of America, the Citi, the JP, the Goldman. All of them are going to be too big to fail, systemically too big to fail, interconnected with one another through a massive, massive amount of derivatives, whereby if they fail, they'll bring down the whole system. But the little banks who run into trouble, and we're going to talk about why they run into trouble in a moment, but those banks, no, they won't be bailed out, and too bad. And what that's going to do is collapse the entire small banking industry, the entire regional bank industry is going to collapse. Who's going to leave their money in these little banks? If you're running a business, let's just say that the Rich Dad Network kept all their money in a small regional bank near your office, people that you've known and trust, and they've been great to you, and they know you by first name, and they know your staff by first name, and they treat you the way you expect to be treated. Not anymore. Those banks are not too big to fail. And if they go under because of the systemic nature of what is happening, they're not going to be bailed out. And it's important to understand something. So all of these banks over the last several years have accumulated with the deposits that they received since the president was able to remove all of the reserve requirements during the pandemic to zero. So most of these banks have virtually nothing in the way of currency on hand. And because they would take these deposits that came in from the depositors, and they would buy bonds with them, typically treasuries, and in many cases mortgage-backed securities, at rates above what they were paying, of course, to the depositors, but in what was typically considered safe places to be. The problem is all of those bonds have an average maturity or an average yield rather of about 2 to 2.5% and long maturities. And so the problem is that since interest rates have risen closer to 5%, every one of those bonds in their portfolio have lost 50% or more of their value. Now, the banking regulations say that they don't have to mark those to market until they sell them. And so they have a whole balance sheet filled with toxic assets that have lost over half their value or more. So in the case of SVC, when you saw a run on the bank, for whatever reason, you get people running on the bank because there's so little cash, the reserve requirements have been slashed to nothing. These banks are forced to sell their bonds at a huge loss in order to meet customer demands to get their money back. And if enough people redeem or withdraw their money, and the banks are forced to liquidate their bond holdings, which have been eviscerated by rising rates, then as we saw last week, a large bank can become insolvent in less than 24 hours. And that's exactly what happened. The FDIC can't handle this. Their insurance fund is only 0.03% of bank deposits. 0.03%, roughly $125 billion in FDIC liquidity backing over $9.5 trillion in deposits. So if just one or two banks fail, that's it. That's gone.
So what's going on today is deception, betrayal, and collusion. There's a book by a friend of mine, Nomi Prinz. She wrote the book Collusion. It's about how the central banks of the world, besides they're not really banks, they're really Marxist, they're central, but they're not really banks, of how they collude. And they collude with big companies like BlackRock, Larry Fink, Secretary of Treasury Secretary Janet Yellen. This is collusion. She was also head of the Fed, and now she's head of the Treasury. Any collusion there? And so our economy is crashing at high speed.